Good afternoon, good evening, good morning, everyone, wherever you are in the world today. So here I am with with Tony, Crypto Knight, and on this Freedom Friday, as you know, Freedom Friday is about freedom, and it's about bigger picture. It's about you know uh, looking at things on a high level, but also what we're going to do today is I suppose today we're going to look on a high level as well, but we're also going to look on a kind of a lower, more practical level, um, or on the aspects of freedom. It's all about freedom. We're coming now into financial freedom, and what are the habits, what are the principles, or as we said, what are the rules that we need to look at in order to actually change our wealth around. So we're going to do a slideshow, and because I prepared the slideshow, I might just kind of set it off, and then Tony will come in and add his insights, because Tony's looked at these 8 rules as well. So what I'll do, I'll introduce the 8 rules, why we've come up with these 8 rules. It's not us who came up with these 8 rules. It's actually Andrei Havratov, who is the founder of EvoRich, and he was a miner. I think he was in the army. Then I think he was a break dance instructor. So he did a lot of things in his life, and he kind of made money and lost money several times in his life until he discovered what he now calls the 8 rules. So what he says is that unless you have the right mindset and the right rules to that you follow, you cannot be successful in investing, because investing itself needs a particular mindset. So and so as an extension of that, we are introducing this to you because you're interested in crypto and DeFi, and in a way you're investing in crypto and DeFi. And so why we are bringing this is that we also believe that having the right mindset in investing in crypto and DeFi is really important if you're going to succeed in this space. Do you agree, Tony? Yeah, mindset is.
It's vital. I mean, it's vital that this is ground zero, really. And this is especially relevant to us now because as the old system collapses, partly because we gave our money and our power away to other parties, which everyone had to do. It wasn't our fault.
Mm.
But the thing is now with crypto and with the new system that's coming, we have to step up and be more self-responsible. And
Yes.
if we're going to be more self-responsible, we've got to have some guidelines of of investing so that we can, like George says, we've got to follow those rules. These are principles. These
Mm.
aren't just rules for rules' sake. The problem in the world is we've got too many rulers and actually
Yes.
not the right rules.
Yes.
So we need to reduce the rulers, and we need to step up and fill that void by being, knowing how to manage our money. It's not just about making money; it's about managing money and how to, all the way along the chain, so that if we're creating generational wealth, we're leaving something for those after we've gone, and we're creating a real platform. This is why the real rulers of our world have done that, but they haven't
Yes.
sort of got to pass those on to us. So
Yeah.
now this is education
Now
101,
we
really.
get to do it ourselves. I mean, they did it because they were in the right place, in the right position, socially they were well placed to, or maybe not, because I think some of them really had very humble beginnings. I think, the Rothschilds probably started as Jewish traders, I think it was, but they built themselves up into society. And I mean, there are all sorts of narratives around that, but I'm just kind of giving you one narrative, is that they managed to get in with the the leaders, and became the bankers to them, and bankers to governments, and bankers to whatever, and they must have applied the principles, because they gathered their wealth. So that was available to them, and it wasn't available to everyone else, because there were some people who were peasants and serfs, and there was no way up from there really, except for maybe the odd few. But now we are in a position. This is what DeFi and crypto is offering us. It's offering us this ability to leverage what the efficiency and the efficiency of that algorithm, in order to create money much faster than we could before. And so, because we can do it so quickly, we need to be skillful in how we do it, because we can also lose it just as quickly.
Yeah.
Right.
Exactly.
So I'll just screen share and go into our keynote. Get rid of some of this stuff. So as Tony said, we call it the 8 rules because that's what Andrei Khavratov calls it. You could say they're the 8 principles. I know some people don't like rules, and they think, I don't like to be ruled. I want to be free. But these rules, you could look at them as principles. But within these 8 rules, we are going to talk about 5 commandments. And Khavratov says, these commandments are really, they're like the biblical ones. They're really, you shouldn't break those. The rules themselves can be, a little bit flexible and fluid, but it's really advised that you follow them. But the commandments are really ones you kind of must follow, because they're the basis of all that follows. So if we look at where we are at now, how many of you feel that you work to pay your bills so that you can live to work? You pay your electricity so that you can actually survive long enough to then go to work the next day, and then work some more so that you can, and so you're on this cycle of living to work to pay your bills so that you can live to work the next day. Maybe some of us have kind of gone past that now, but I think this is a reality for a lot of people. And how many of you kind of remember the times when you were a child, and when possibly it was one parent earning the income, and then suddenly in the when was it, the 70s, I suppose, the idea of double income families came in. So I think that was a time when the feminism also came up, and so the idea of the woman going out to work and the man going out to work, it was hailed as a success for feminism. But now we look back, was it actually a justification for the times that were going to get harder, and that actually one person couldn't, whether it was the man or the woman, couldn't really support the whole family, and therefore you need to have both of them working. And I think, as time went on, life did seem to become harder. Is there a greater inequality of wealth in spite of what we talk about, democracy and blah-de-blah? Do you feel sometimes you're working more for the government than for yourself? You work 3 months of the year or more, 3 or 4 months of the year, actually not for yourself, but for the government. And you know, back in the day, you kind of worked and then you retired and then you enjoyed your retirement. But you know, does the future of retirement for us now, and supers and pensions and whatever, you know, does it look as bright as you thought it might? And you know, and we see a lot of people downsizing and putting up with kind of a less of a lifestyle for the rest of their lives because basically they cannot afford more. And you know, is that a good thing for society? I mean, you know, it seems to me like that's a failure of society. And of course, have you noticed that your dollar doesn't buy as much as it used to? I went to fill in gas today. It's almost $3. Has anyone else discovered that? It's $3 per liter. Like, oh, what the heck happened? You know. So we were taught a particular way of earning a living, weren't we? We were told, well, you know, if we are kind of baby boomers, well, I am anyway. You know, we were told, okay, study hard, get a degree, or get a good certificate or degree, get a steady job, you know, get married. Well, they didn't tell us, but it was kind of assumed. It was a cultural thing, you know, you get married and have children. And then what happened is, you know, when you were a couple, that was all hunky dory. But then suddenly, when you had children, you know, you needed a bigger home, you needed a bigger car, you needed stuff, you know, and that's when then we started. And then there were all these attractions. Oh well, get a mortgage. You know, you can have your own home. You know, get a hire purchase agreement. You can get a bigger car. Here, have a credit card. No, have 6 credit cards, and this whole debt culture grew. And then the idea was, you know, eventually you retire, you get a nice golden watch, and then you enjoy the fruits of your career, you know, in your rocking chair, you know, looking at your grandchildren playing in the yard and things like that. However, I think, what do you think, Tony? This whole hamster wheel thing doesn't seem to be working anymore, does it?
Well, it, let's say the wheels that are that are falling off.
They're falling. Yes, they're falling off the frame. That's
Yeah,
right.
and this ridiculous thing of you know, working your butt off to 65 and then retiring,
Yeah.
when actually most people are retiring basically in poverty and living off the
Yes.
pension is a complete joke. And that's certainly a broken system there.
Yes.
You know, this whole the old education system, right from the beginning, is conditioned us
Yes.
to prepare us to take that mindset on, that it's noble almost to,
Yes.
you know, work your fingers to the bone and
Mm.
have nothing.
Yeah.
It's almost like a badge of honor.
Yes.
And you know, I threw that badge out myself about 20 years ago and decided not having it. But it's taken me this long to graduate to the
Yeah.
to
Well, because it's so culturally ingrained, isn't it? You kind of it was a kind of an assumption ever since you were a kid that's the way society works, and
yeah,
yeah.
yeah. And it's us about face. It's completely backwards. We're the ones that provide all the labor. And like you said in your earlier slide too, about, you know, you said, you know, maybe 30 or 40% of your income goes to the government. It's more like 50 to 60%,
Right.
because it's not just the income tax; it's all the other taxes on top.
Yes.
I've seen statistics where we're working more than 6 months for the government before we really start even having anything in our pocket.
Right.
So when you look at it that way, that's pretty stark.
Yeah. Yeah. Yeah.
Yeah.
And we're not, you know,
Anyway.
we're not wanting to like get you all, you know, really depressed, but you know, we have to face that this is what has happened. And but we are also bearing good news. So if you stay patient with us, we're just kind of we're just trying to show the problem, and the problem that many of us did not realize even existed, because as Tony said, we kind of took it on, as a badge of honor that you work hard. I mean, how many of you, your parents told you, oh, you got to work hard, you got to work hard, you got to work hard. And so you worked hard, and then if you didn't work hard, you felt guilty because you weren't working hard enough. So you worked harder until, some of us got heart attacks or, high blood pressure or whatever health problems. And we felt good about that because, we kind of, we did our bit for society.
I might add on that note, Gerald, that there's nothing wrong with a bit of a good work ethic, and there's nothing wrong in working hard, as you got to start somewhere. Yes. And I think that you can take it too far the other way. We can't expect things to just drop in our lap.
Yeah,
we're not actually advocating that.
No,
but we to work hard day in, day out, week in, week out for basically your life is not what we mean. As we put that effort in, it should be bearing a lot more fruit than what it does.
Yes, that's right. So what we've come into, and we're not even in a developing society, right? I mean, okay, there is poverty in some countries, real dire poverty, okay? But what we've come to now is what I would call middle class poverty. So we're kind of middle class-ish, but we have a poverty mindset, we have a poverty existence, and I'll show you in a minute, we actually have a poverty money flow. So how did all this happen? So we had back in the 50s and 60s, we had a single parent or we had a single person as an income earner, and then you had, usually it was the man, and then the woman was looking after the children and performing a really, we've kind of put it down and say, oh, you're only a housewife, but actually housewives were performing a huge social function, and so we didn't give it the due that it was supposed to have, and I suppose it all became confused with all the freedom issues and feminism, and that's fine, but then we've come to a point where we are middle class people, yet we seem not able to forge ahead. And the reason why, I think one of the major reasons is the fall in the value of the dollar, right? So if you look at the 1913, I suppose, since the Fed first started, right? If this is an index, if the dollar was at 1,000, well, it is now at less than maybe 50. It's about 40 or something. So, and this is provided by the Fed. This actual chart is provided by the Fed. So it's showing us that the dollar has dropped by over 90%. So if you have a falling dollar, devaluing dollar, it means that you have to work harder to actually earn your basket of groceries, to earn your petrol, to earn your car, all those, your house and all those things. So we have had the value of our currency being pulled. It's been a major rug pull, and I don't know whether it's intentional or not, but this is what has happened. Some people would say it's because of government intervention policies and whatever, and of course it's also because the dollar was no longer backed, was taken off the gold standard. I think gold at this time was about $20, right? And then it became when they went on to the gold standard, I think it was $35, right? $35 an ounce. But now the gold is $2,000 an ounce or more. I can't even remember. So has the price of gold gone up, or has the value of gold remained the same and the value of the dollar gone down? And I think it's the value of the dollar. So
Yeah,
yeah,
it's predominantly because of the money printing, because
yeah,
they could print forever. Because once it was taken off the gold standard, that means there was no restrictions on
yes,
the print,
that's
because they
right.
only could print as much as what
Yes,
gold was.
yes,
But people have got to realize that inflation is inbuilt. It's like an algorithm that's built into the current system, designed to suck the wealth from us. I can't repeat that. I can't state that clear enough. It was designed that way to steal the wealth from the people. People have got to realize that inflation is a hidden tax, and it doesn't just disappear in the ether. That value of that money is going back to the bankers.
yeah, yeah,
So people they've got to get that square between the eyes.
yeah,
Otherwise, we'll still keep blithely going through life like, all is good. It's
yes,
not.
yes.
This is why crypto with its deflationary tendencies is so vital.
Yes, yes. Well, yes. I mean, and also the age-old adage, like save your money, put your money into savings. Well, if you put your money into savings now, into a savings account in a bank, you are literally losing your money. You're not saving your money; you're losing it. Uh,
Hmm.
so
Yeah.
and some people say, well, yeah, all this crypto stuff, I prefer cold hard cash. Well, if you keep your cold hard cash, if you had cold hard cash in the 50s and you kept it somewhere, well, by the time you got to 2020, it would be hardly worth anything. So that's not so good either. Okay, so so what's happening? What habits did we get into? Well, I think inadvertently and through education, we got into the habit of the poor. And by the poor, I don't mean by the poor, the destitute. What I mean is people who have a lack of wealth mentality. And
The
these
working
people,
poor.
pardon?
We call them the working
The,
poor.
the, the working poor. And it can be the rich who are also poor. So there are people who are rich, but what they do is all the income they get, they might get $10,000 a month or even $50,000 a month, but they spend it all on expenses, or they might have a lot of expenses. So so this is the lifestyle of the poor. They earn and then it goes straight out to pay the bills. They earn and then it goes straight out to pay the bills. And we go on this is the hamster wheel thing. Then some people then think they're rich. So what they do is, yeah, I got extra money, so I've paid my expenses. I'll go and buy some goodies. So they go and buy goodies, they buy cars, they buy a house, they buy fancy hi-fi and, whatever, fancy clothes and lots of shoes, luxury goods, Gucci belts and all those things. And they also go into debt. And debt, so this is what is called a liability. So a liability is something that drains your money and goes down in value, or has negative value. And people get more and more into this. I mean, we've got more and more into a debt society, haven't we? Into credit cards. I mean, credit cards, they came in the 80s or so. And at first, people were suspicious. They thought, "Ooh, what's this?" I think Diners Club was quite big amongst the rich, American Express as well. Then Visa came along, and Visa then became accessible to everybody. and the banks were pushing everybody to get a Visa card. You know, you can buy more, you can buy a new fridge and blah de blah. And that created a debt society. And so now, basically people are 95% in debt. You hardly have anyone who is not in debt. So this is not a satisfactory money flow either. And then the next one is, now this is the secret of the wealthy is they don't spend, this one is a thicker arrow. Okay. That's a thinner arrow. They might spend something on a car and, a few bits and bobs, but they will not spend on debt, or they will refrain from spending on debt. What the wealthy do is they spend on assets. They put their money into assets, and what the assets do is the assets make more money. So the assets make more money and send money back into their income stream. So they're actually, what they've spent comes back to them, and it creates this circular income asset, and that is the secret, basically. I think if you sorry,
that's how money makes money.
Yes.
When
Yes.
you are and when you've got assets that are paying you a passive income,
Yeah.
then you can go out and buy the nice car.
Yeah.
But what people want to do is they want to go into debt first up. They want to buy the nice house and get the big mortgage in the early stages, and then they're always behind the eight ball.
Yeah. Yeah.
If we got the assets as the primary mover, then once they are producing, whether business income or as we whether it's crypto or whatever it is, investments, once they are providing, once they're working,
Yes.
then you don't have to work. Your money's working for you.
Yeah. Yeah. So yes, because as an example, this is the way we are taught to live. So a lot of people, including NBA stars. I mean, NBA stars, right? They make maybe 4 million a year or even more. So for the few years that they are in NBA, National Basketball Association, they are millionaires and they're living the millionaire lifestyle. But there are a huge number of NBA stars who, the moment they stopped playing, they became completely poor. They lost everything because while they were millionaires, they were living the millionaire lifestyle. They were clubbing, Lambos, big houses in LA or whatever. So this was a luxury lifestyle that they maybe they hadn't had, and they had dreamed about all their lives as as kids. And then the moment the tap stopped, they were poor. They were destitute. And this happens a lot to people who win lotteries as well. So that's why, because they don't understand this part. This is the secret, and it's not even a secret. It's just something that rich people teach their kids, but society doesn't teach us. So what if, as children are taught to start building their assets? If you give them pocket money, for instance, you give them, I don't know, $5 a week or whatever, although $5 a week, kids nowadays demand more. But, and they put 10% of it into an asset. You showed them how to do it. Well, by the time they are 20 years old, they've got substantial assets. By the time they're 30, they could be millionaires by that time already. So, through the power of compounding, and we're not going to talk about compounding today. We'll talk about it another day. But the compounding has been called the eighth wonder of the world. It's like this is a magical thing. So we'll now come into the actual rules. So rule one is understanding what is financial freedom and to aim for that. So, you know, we know that being rich, being an NBA star is not financial freedom because, you know, the moment the income tap stops, you're broke. So what is it? What is financial freedom? And some people, Andrei Havratov makes a distinction between financial independence and financial freedom. So the way he puts it is, say for instance your expenses, or say you needed $2,000 a month, you know, to kind of pay your bills and live comfortably, kind of, you know, okay. So in order to have $2,000 a month, you would need, say, $240,000 would give you $2,000 a month for 10 years, right? So you could say that for 10 years, you're financially independent. You don't need to work for 10 years. And a lot of people have this idea, okay, I've got to accumulate this amount of money so that then I can live off it for, you know, 10 years, 20 years, and then I'll have to maybe then do my super or whatever it is, you know. But he was saying that Havratov says this is a limited kind of view. Really, what you should be aiming for is financial freedom. And what is the difference? Well, financial freedom is if you took that $240,000 and instead of putting it into your bank savings account, right, you put it into an investment at 10% per annum, then that 10% per annum would give you $2,000 a month for life. So it wouldn't last you just 10 years, it would actually last you all your life. So that then is financial freedom because you don't have to work for the rest of your life. There is a caveat to that, which is then inflation. So we'll talk about that later. But now things are opening up so drastically that you can actually earn 10% per month fairly easily in crypto. I mean, you would need to do some research, find some good sound projects, but there are projects that offer 10% per month. In which case, all you need to do is to accumulate $20,000, and if it offers you 10% per month, well, you get $2,000 a month for life. So crypto is giving us the opportunity to kickstart our financial freedom in much less time than before. So that's why we're so excited about this opportunity, because it's actually the fast track to financial freedom if we do it right. So what financial freedom means is that you no longer have to work or depend on anyone, right? And your principal grows faster than the inflation rate. So we'll talk about that in a minute.
Yes. So it's worth mentioning here that the whole Everrich platform is based on getting us into financial freedom. And they are employing the rules, these 8 rules, to the absolute letter. And I can testify the fact that, the money that I've invested into there is returning way more than 10% per month.
Yes.
In capital value, in equity. I might add that this is equity. It's like if you're blowing up a balloon, you can blow it up quite a long way. This is a balloon that won't pop, by the way. This is one of those balloons. But it will get to the certain stage where it will then start paying you. And so what we're doing is they've put in the foundations for which we can then position ourselves on the same foundation.
Yeah.
And the asset portfolio has literally grown tens and tens, I think it's hundreds of thousands of percent in value from just a few tens of thousands only 8 odd years ago to now, tens and tens of billions of dollars
Yeah,
of
possibly
value
60
of
billion.
assets.
Yeah,
Yes,
yeah,
60 odd billion. So, and the tap is about to start. It was going to get to a point where then those assets start producing their own income, and then we will be able to then harvest from that.
yeah. So the first one is be understand what financial freedom is, and then get your head around this. This is really important. It took me a while, but once I understood that, it like the penny dropped, and I thought, wow, this is awesome. There is hope. And then, so the rule 2 is follow the 5 commandments. So Havratov says these are they're like the biblical commandments. This is something you really need to really do. And the first one, he says, the most important is pay yourself 10% of all your income. Always, regardless of whether you got to pay bills or whatever, pay yourself your 10% from the day you start work, your first job ever. And that, he says, is the commandment of all wealthy people. They pay themselves.
And what he actually means by paying
Yeah.
yourself is that you invest
Yes.
that 10% of
Yes.
your income.
Yes. So
Yeah.
when you yeah, that's right. Because say if you went to the restaurant and had a meal, that would be paying yourself, but you're not really paying yourself in the long term. So what he means, yes, thanks Tony. So what he means is when you're paying yourself, you're actually paying your worth. You are adding to your worth, right? Not just your momentary sensory gratification.
That's right. Yeah. Very important distinction, because most people think, oh, I've earned my money.
Yeah.
I'm going to go and spend. All they're doing is they're paying themselves to spend it to keep themselves on the mouse wheel.
Yeah. Yeah.
So that's not really, you're paying yourself, but you're actually defeating the purpose of
Yes.
process.
That's right. Yes. And the second one is, control your expenses versus your income. And this one is this. I mean, this is a timeless one. Live within your means, right? But how many people do you know who are living on the edge, and they're having to use their credit card, then they're having to open up a new credit card, and then they consolidate their funds into a new credit card, yet they continue to live beyond their means. So this is something you really and what Havratov recommends is you actually keep a spreadsheet of your daily income and expenses, and you actually look at that every day and you fill it in every day until you have a complete internal knowledge of where your money is coming in, where it's going out, and you have and then start looking at how to cut back on your expenses if you are not living within your means.
So the idea there is, when you're putting attention on your expenses, you will unearth the fact that we easily explain away, oh, well, it's just a coffee, it's just it was just a meal, I deserved it, all of this. But when you add it up, when you actually look at it, at your expenses, you realize there's a lot of things in there that were really just more gratification.
Yes.
And
Yeah.
you compare them back. It may seem like you're having to, you've got to, living a little bit on the smell of an oily rag. But remember, this is just a temporary thing. This is a mindset thing of self-control here. And
Yeah.
it's just maybe a handful of years of self-control to be able to actually live the life of your dreams for the rest of your life.
Yes. That's right. Okay. Okay. So yeah, have a personal profit and loss, income and expenses. Uh, he says that's really important. Protect your funds from erosion. So yeah, we'll quickly go through that one. But basically, what you've put yourself away, what you put away for yourself, that 10%, you have to protect it tooth and claw, because there will always come situations. You'll always. He was saying, it was quite funny. He might make like a $3,000 he made from something, and then the very next day a friend comes along and says, "Oh, I'm really down and out. I've really got this emergency thing, and I really need to borrow 3,000 from you." And he said it was like it was like clockwork. Every time he got some money, somebody would come along, or there'd be the car broke down or whatever it is that would try and pull that money back out. So you have to be really aware of protecting that, from all these people, but also from the situations in life that seem to be urgent, that seem to demand that you break into your piggy bank. The fourth one, of course, is really, really important, and that goes back to this, is learn to invest. So this is what we are doing now, and this is what you can learn in your Profi Invest. If you bought a Profi Invest program, you would learn then how to invest in various investment instruments, but also learn to invest in crypto. And this is what we are teaching you and what we are sharing as we learn as well. So this is the important thing. Well, they are all important. But the other thing is also learn to earn more. So, consider other ways of earning income. Back in the day, it was one way. You worked for the firm and you worked your way up the firm and whatever. But nowadays, people are earning multiple streams of income. Like I was saying just a couple of days ago, you can work in a DAO, a decentralized autonomous organization, and do work in several DAOs and do odd projects and get paid for them. You could set up an online store. I know so many people who sell jewelry or things that they have created, or they just set up some kind of online store and earn some income from that. You could start teaching. You could start there are all sorts of ways you can use your time in ways that earn you income. So kind of think about that and see how you can actually expand yourself in terms of streams of income. Why is it about this time that the computer freezes? Okay, rule 3, define your financial plan and stick to it. So first of all, we talked about that financial freedom goal. So work out what it is that you want to achieve in terms of your monthly income. What would be satisfactory for you? Would it be $2,000, $3,000, or maybe just $1,000 for the next 5 years because you still have a job and you're doing okay and you just want to build your capital? So be very clear around that, because the more clear you are around your goal, the more you will find that things fall into place to achieve that goal. And when do you want to achieve it? So always remember, we talked about SMART goals before. So have a time attached to your goal, and also, of course, have a look at your starting capital. So if you're starting with $100, well, you might not achieve $1 million by the end of the year. But if you started with $100,000, you actually possibly could achieve $1 million by the end of the year if you did it right with crypto. So, you balance all those aspects. What is your risk profile? What can you tolerate? Are you happy to go into things that are quite high risk, but that can give high rewards very quickly? Or would you feel more comfortable going into something that's more stable, conservative, and that brings steady growth and steady income over time. Uh, and identify offline and online projects and financial instruments. So this is what the Profi Invest, the Evo Rich training does, is it shows you how to invest offline, out in the trading space, in the real world trading space, and then we show you how to invest online, in DeFi and things like that. But Evo Rich itself is an investment. So you could look at, okay, Evo Rich is, you could put your money into Evo Rich, and Evo Rich itself is investing offline and online. So you could look at it as a kind of a hedge fund, or, well, it's a crowd fund which you actually own all those projects that they're going into. And then the other thing is, we talked about, you have to feed your wealth with attention. So what you focus on grows, right? And what you focus on means where your mind goes, energy goes. That is a very vitalistic kind of principle. And so if you give energy to your money, to your wealth, you look at your spreadsheet, you look at your P&L, you look at your hyperfund, where it's at, look at all your crypto things. Every day, allocate half an hour. You see that it will start to grow. It'll start to grow. So, that's part of your financial plan. Know what is happening with your financial plan.
And constantly review it.
Yes.
Don't just write it out and put it in a drawer.
Yeah, that's
put
right.
Put it in a journal that you're always going into, or put it up on the
Yeah.
wall in front of you when you're doing your work. And you can, to say that when you do certain tasks, you can add other tasks like reviewing your goals in the same time. Your regular things like you pay your bills.
Yes.
Do something on a little bit every day or on a constant basis.
Yes.
And be prepared to upgrade your income goals.
Yes.
Push the boundaries. I mean, it was only quite recently that I myself, I always sort of like tended to aim fairly low, because, what happens is we tend to underestimate what we can do in the short term,
Yes.
but we overestimate what we can do in the short term, but we grossly underestimate what we can do in the longer term. So I think we need to, along with that self-discipline to actually maintain your plan, we also need to have an expansion. We need to expand our mind, basically.
Yeah.
A lot of people say, "Oh, that's greed and all this." No, I don't think so. I don't think so, because as you're growing your consciousness as well, then you can be of much more use to the community, and where consciousness goes,
Yes.
prosperity will flow, for
Yes.
sure, to the community.
And this is something that I think we also have a kind of aversion to doing. In fact, a lot of people have an aversion to looking at their bank account every day, because they think, oh, I'll look into it and realize that, a huge bill has gone out. There's a bit of fear around it. So I think that fear is something you need to become aware of it, and then start making friends with your money, so that eventually there's no fear around it. And then when you pay a bill, it's not like, oh no, I'm poorer by however many $100 or whatever it is. You send your bill along its way with blessings, and say, yeah, this is great. I can pay for my bill. I can have my computer on. I can get my water and whatever. And more will come back to me, and open up your energetic tap or stream, so that as your bills go out, you also assume that funds are going to come back in to fill up the bowl, fill up the pool.
Exactly.
So there's a lot of, and this area raises a lot of triggers in people, and and so this is a money is a huge area where you can actually start looking at yourself and looking at the beliefs that you've been brought up with and that have been underlying your decisions through life.
Mhm. Very important.
So rule 4, diversify, right? So, are you all in on one project? I know some people who are all in on particular currencies, cryptocurrencies, and because they feel that's the one that's going to explode or whatever. And just as a general principle, I would say you just never know. You just never know. So no one can predict. So it's really probably the best investors always diversify. There's one or two who said, I think Warren Buffett said, oh, only idiots diversify, because I know what I'm doing, right? Possibly. But we don't have the ability to research things to the nth degree and to really be sure that they're going to work, and so I think most traders would say diversify your capital. So while you're in it, try and recover as much as possible. So what you put in, into a project, try and recover that seed money or that principal as soon as you can. So, for instance, if within, say, a couple of months, your money has doubled, right? So you put in $1,000, and then after a couple of months, it's 2,000. Take out the 1,000, even though it's kind of tempting to leave it in there, because you say, oh, it's doing really well, so you leave it in there. I mean, the number of times I put my money into projects and I thought, oh, I'll leave it in there because it's doing so well. And then the next day or the next week, the project crashed and I actually lost all my money. So, it's something the next point is about discipline. So this is something you need to think about. But most of my projects I've actually funded from my seed money that I recovered, and then I use that seed money that I recovered and put it into the next project. And then when I recovered the next seed money, I put it into the following project. So I have been, to a large extent, building up my diversification by pulling out seed money and moving it to the next project, and then moving to the next and next. So I have not put that much of fresh capital into my portfolio. So as I say,
Nor have I.
yeah. So as I say,
I
plant
have
it
for
into,
some time.
sorry, for some time. Yeah, that's right. That's
Yeah,
right.
for for about the last year, I basically
Well, there you go.
just it's called the ultimate revolving credit.
Yes, yes. And it's really satisfying to do that, isn't it? It's like, wow, I haven't even have to fork out for going into the next project. It was the last project that paid for it.
Yeah,
So the idea is to diversify, and it doesn't mean two or three. What we mean is that the professionals or the experienced people have 20 projects, or I know someone who has 40 projects, right? Of course, that's taken some time to develop, and she does it because she's really interested in exploring this space. But for most of us, 10 to 20 would be quite a good quite a good profile, with a kind of a range of risk reward spread over those projects.
that's where your knowledge and understanding of the projects and the underlying asset that we're in, like say crypto, that's where it's so critical, because
Yes.
starting out, you just focus on the basics and focus on the just focus on your maybe one or two or three projects and get them really down pat.
Yeah.
And I know
Understand them.
we offer a lot of different things, but you don't have to take them all up. Just
Yes.
just just look for the ones that work with that appeal to you the most, and then get to understand the project intimately well. And then you'll find that you can recover your seed money much quicker, because if you start referring,
Mm.
and the referring is just a natural, it's just a natural evolution from your understanding of the
Yes.
project.
Yes.
You start talking about it almost like conversationally,
Yes.
and that's the way to really accelerate your earnings.
Yes. Yes. That's correct. And this is the new way of of network, network marketing. I know some people have this kind of ideas around MLM and all that, but I think this is what we are doing here is we are really sharing goodness. We are sharing public good. So and in a lot of these projects, there is no pressure to refer, but if you're earning and you're doing well with it, why not share it, and why not let other people get the goodness of it? So yeah, and I think that's gonna happen more and more. We become more easy with which, and as Tony says, the more you understand the project, the more you understand where it's going, the potential. And this is what I find: the more I learn about Evo Rich, the more I'm behind it, because the more I realize that it's offering so much potential there. Then the next one is to maintain that discipline. So this is something, a lot of investors, they kind of waver, and they buy crypto, and they get emotionally attached to their crypto. So they ride the crypto up, and they think, oh, I want more, I want more, I want more. And then they think, oh, it's gone really high, but I love my crypto. and then when it crashes, they crash with it. And so we need to look at all this as, however much you support a particular crypto and how much you're behind the project, you need to have some kind of plan around it. And this is what some people call an exit strategy. It's like, okay, how far am I prepared to make a profit on this particular thing? And a lot of people have this idea that they can never get back into it, so therefore they need to stay with it. It's a bit like a relationship. But hey, you can get out of it, and then when it goes down again, you can get back into it. So don't get too attached to a particular crypto or projects are more long term, but here I'm more talking about shares or crypto or things like that. As we said earlier, withdraw your principal as soon as you can. Don't dither, because I've been caught out by that one a few times. Because I was attached to the outcome, I thought, oh, it's doing really well. I'll just hold on for a few more days or a few more weeks. But some things don't always last. And we need to understand that there's some things we actually go into which could have a really high rewards, but we know it's not going to last. So we have a strategy to pull out as much as we can as long as it lasts. And that's a valid strategy too. So stick to your exit strategy. We'll talk a bit about those, but have an idea. Okay, once it reaches a particular level, or I've made, say, 50% or 100%, then I'll take out 50% of it. Yeah, so you have an exit strategy. So you're not exiting completely, but you could exit 50%. You could sell your position 50% and leave the rest if you feel that it's still going to go up. And then as it goes up a bit more, then you pull out a little bit more, then a little bit more. So all these are strategies, and they need a large amount of discipline. One thing that people often do is when a project is doing well, they pull out all the funds from their other projects and go all in on one project, because of greed, I suppose. And that can be quite dangerous. So keep your plan, stick to your plan. Oh, there it is, number 5. But as Tony just said earlier, revisit it, because your goals might grow. You might find that your wealth has grown faster than you expected. And this is what a lot of people in Hyperverse tell us, is that, they saw it growing up, going up, going up, going up. Then this whole thing snowballed, and it was growing faster than they thought it ever could. So, when things like that happen, then you can change your plan. You could look at other ways to use the rewards. Greed, laziness lead to ruin. That's what Andre says. So laziness means when you don't bother, you don't look at your investments. Maybe you hand it over to others. I've known so many people who've handed it over to people they didn't know, who said, yeah, we'll invest for you. And this has happened a lot in shares, stock market, and things like that, and then these people just lose. They have no incentive to make money for you. So they go and bet on anything and then lose your money, and then they come back to you and say, oh, sorry, there's nothing left. So be responsible for your investments. That's what I'm trying to say. Have responsibility. But if you know someone who's like, we've talked about a hedge fund, so we know this person who is running the hedge fund. We know that she's got a good track record, so we have confidence in her. We can't guarantee that she will make 2,000% in a year or whatever, but at least it's one thing that we do. It's among our different things that we do. So we don't go all in to her hedge fund. We also invest in other things, and then we have a hedge fund as one project as well. So be active, and then don't let greed pull you from your exit plan. We talked about earlier. Greed, the opposite of greed is fear, and the market is driven by fear and greed. And if you follow the fear and greed of everyone else, you will be like everyone else. You will lose, because the ones who win in the crypto markets are the ones who go in before the greed has taken hold of the market, and they pull out before the fear has taken over the market. So you have to be one step ahead of the market, and so you have to really disconnect yourself from your inherent greed, which we all have, and your inherent fear that we all have. And also, when you see things happening in the short term, don't let that affect your long-term financial plan. So for instance, if you put your money into something which is a long-term thing, and then you see, oh no, the value of the token has gone down, it's like now down to 10 cents when it was supposed to be $5 or $10. Okay, that just ride with it. Don't let your fear affect the long-term plan, because that just follow your plan basically, and you'll find quite often that, not always, sometimes they might not come up again, but I've known a few people who pulled out of a project, and then that project took off, and then they were kicking themselves ever after, because they pulled out because of fear.
Again, your knowledge and understanding is also critical in that. Things change, and so you've got to kind of keep abreast of what's happening with your project. At least every little while, you should revisit what's happening, keep in touch with the groups, or keep in touch with the project through your account. And then you might see signals are changing, and you might want to pull your money out, but make sure you do it from an informed position. Don't react on emotion. Don't react like with the herd. To make money, we have to be counterintuitive. We have to be contrarian.
Yes.
And contrarian investing is really important in crypto.
Yes, I
So,
think this rule six, yes, that's right. Rule six is really about contrarian investing. Yeah.
yeah, and in a perfect example is that, well, it's not yet fully confirmed, but this SEC XRP case is a perfect case in point. Talk about the fear index being off the charts with that. When SEC sued them, a lot of people just dumped. They just sold because they
Yeah.
thought it was all over. Well, the signals coming out now, it looks like they've settled already behind closed doors. The rumors are really proving to be what we thought all along, that we're going to be proved right.
Yeah.
And if that's the case, the price is going to go to the moon. So, be contrarian by investing in a crypto that's getting sued by the SEC is pretty contrarian. But it's because we've got the underlying knowledge of what's happening and why they're being sued that's given us that confidence. So
Yeah.
that's a perfect example.
Yeah.
Mm.
So rule seven, keep educating yourself. Education is your best investment. Well, it's just like Tony said, educating yourself about the market, about your crypto. So what's behind XRP, for instance? Is it a meme coin? What is it? So if you actually research it and look into what's behind it, what is it for, who's backing it, and all those things, and then learn about what is the SEC case about. Those are your best investments. So you make informed decisions. So there's that side of it, learning about what is happening in the world, but also learning about the developing technologies, learning about NFTs, learning what is a metaverse, learn about metaverses, learn about staking, learn about yield farming, learn about so there's a lot of learning you can do. And some people try and jump in without doing their learning. And in this space, you can get yourself, you can get your underpants in a twist very quickly. Like if you don't understand how a wallet works, you don't understand what is a network, you don't understand about public addresses, things like that. So do the basic education. So this is why we keep saying go through the basic courses, learn how to set up your this and set up your that, and play around with those. Play with no money in it, or send $10 or just a little bit of money into each. See how it works. Make a few mistakes. There is no experienced crypto person, or even investor for that matter, who hasn't made mistakes. That's the way one learns. So, but more importantly, we offer these webinars, we offer consultations. For some people, they think, well, consultation, do I really want to pay for that? I think I'll do it myself. And then in the end, sometimes it might be a false economy, right? We're not charging for consultations in order to kind of take advantage of you. We are doing it because we have to pay ourselves. Our time is becoming more and more precious as DeFi freedom grows, and we realize that we need to do more research. We need to allocate time to create content. So that there's a kind of some kind of time, how would you say, value that we need to allocate. And yourself, what I found, I will share this with you. I spent a lot of money on a course, a mastermind course on crypto. And it was money that I could, looking at it, I could say I could ill afford it. and I really thought several times around it. I put my money into it, and I had to really look around. And what it did is it pushed me to look for sources of income. So I actually looked for extra sources of income to fund that. But I would say to you, even though I spent, more than I would want to tell my relatives, I it was the best investment for me. It's opened up doors for me. It's opened up my understanding. It's increased my confidence. It's opened up my networks. So you really, really, I would say to you, it's like when I was a marketer, I told businesses, you need to have a marketing budget. And a lot of companies don't have small businesses. They don't have a marketing budget, so they don't do marketing, and then they don't get people in through the door. So it's the same thing. You have to have an education budget, and you should be willing to spend on it because that's gonna give you confidence and make you stronger and give you more options. So it's part of your being professional around building your wealth. That's why I call it professional development. And having said that, you can learn from a whole bunch of YouTubers. There are good ways to do that. But there are some people who are really, really expert, and they don't come cheap. So you might want to consider spending on someone who is actually really, really expert, and you're going to learn really, really sound education, and it's something that's going to give you a lot of value. Sorry, yeah.
I was going to say, they say the most expensive advice is free advice from someone who has no idea what they're doing.
Yes, and there are a lot of people offering that.
and I'm seeing it so often on social media as well. People are going to social media for their research, and they see associations with crypto and something dystopian. And I know there's a lot of dystopian things happening in the world, but people react to a surface thing. They might see a crypto is associated with a certain family name that we know doesn't have a great name, and it starts with R. And so they won't invest in it because they've seen it on social media. I mean, the truth community is so full of bullshit. I'm afraid I'm just going to call it. It is not spreading truth. Most of it is illusion.
Mm-hmm.
But you got to sift through the amount of stuff. You do find relevant things in there, and there's good stuff. But don't let that be the sole source of your information. I'm copying a few fairly narky comments coming to me now about I'm promoting a new world order. Can you believe that? I know more about the new world order than most people actually out there, but I don't care. I don't care about that because I've been around long enough. But people have got to start growing up and stop being so emotionally reactive. Just had to say that because there's some people have been bugging me lately.
Really? Yeah. Well, and that's the thing, and in a way, it's a compliment because the more influential you are, the more you're going to attract people who are haters or who are contrarians or whatever. Yeah. But the other thing about educating yourself is this is a fast moving environment. So if you're not going to invest in educating yourself now, there's this. It's moving so fast that basically, I would end that. This is precisely what you're doing. This is precisely why you guys are here. You are starting to learn now. I mean, I'm preaching to the converted, but you understand that it's a fast-moving environment, and the people who come in later, well, they'll have more to learn. Maybe the environment might get more simpler and more consumer-friendly as we go along, and this is quite often happens, as time goes on. We are in a period where it's not very consumer-friendly, So we have to learn a lot around, how to stay safe with our wallets and stuff. Maybe in the future it'll be all kind of, automated. You don't have to think about this, that, and the other. But but having the foundation now will put you in good stead in the future, because then as more developments come on, you'll understand what they're about. You understand what's behind them, and you'll understand the terminology and all those things. So yeah, super important. Keep educating yourself. And then the last one is, don't sit on your investment. Keep working on increasing that investment capital, because inflation doesn't stop, and I don't think it's going to stop very soon. And in fact, it might, who knows, it might take off very soon and go into high inflation and perhaps even hyperinflation. So you need to keep your capital ahead of it, so that your passive income keeps ahead of it, so that you've actually got something to live on, and over the next few years. But having said all that, I mean, Mr. Scrooge might have followed these, pretty much. But then don't forget to spend on yourself. Don't forget to have fun too. And this is, I think, a lot of people, they get so serious about their investment and they're living a kind of well, how do you call it? What's the word? Spartan existence, And well, the money is for you. And I suggest ways you can. And in fact, it's interesting. A lot of people also who attain wealth actually don't know what to spend it on. So, they might spend it on luxury, Mercedes or whatever, but there's so many other things you can spend your money on, like on experiences. This is so amazing. You can travel, you can experience the mountains, you can experience the sea, you can experience other cultures, you can experience amazing food, you can experience amazing wine or whatever it is. And spend on learning. I mean, why is because then it'll make you a better person to be around, because you've got more to talk about. But also, learning actually keeps you young. The more you keep learning, you are actually keeping yourself young. And interesting people are people who are interested in learning. And of course, spend on offering experiences to others. We do live in a world where we go Dutch. And I don't know where that expression "go Dutch" came from, but where we go out, we eat somewhere, and we all buy our own meal, sort of thing. Have you thought about, okay, well, I'll invite 10 friends out, and we'll have a great dinner, and I'll offer all of them the meal, and this is something you can do as you go along, and this is something really wonderful. I mean, it's a wonderful feeling being able to offer people experiences that perhaps they don't have often, and then once you can, and also offering experiences to people who are deprived, so you can do that through projects, through charity. I don't know about charity, but you could set up your own projects to teach people things, or to teach them how to make money. So this is my last line is, teach others to do the same as you have done. Because once you've followed all these rules, you will, according to Andrei Havratov, you will inevitably become wealthy. And then, of course, once you become wealthy, you will of course want to show others how it can be done. And because as all society becomes wealthy, then we can shift from party politics and crime and drugs and all those things. We can actually shift towards a society of creativity, of of looking after each other, of being more generous with each other. So all that opens up, I think, if we can spread that. Yeah. So I think that's
So
as far as it is for the 8 rules. So if you've got any um, questions, please feel free to ask. Yeah, that's right. Tax, yes. Pay yourself 10%. It's completely different to save 10%. Yeah. So as we tried to explain, pay yourself is really you're paying your worth. You are actually increasing your worth. Oh, let's get back on. So you're increasing your worth by by paying yourself, and that worth then is worth that builds up. Uh, Consultations are so worth it. I would not. Oh well. Thank you, Anne. So there's one for you, Tony. Have to remember. Yeah, yeah. So
yeah,
so
thank
we.
you. I appreciate that very
Ye-
much. You know, you're a great student. I have to say, you listen, and I can see you take on board what we say, which is wonderful.
mm,
But
mm, yeah. Yes, that's right. And this is something, in order to keep up to date, because there's so much happening, as we said, in the DeFi world. We can't just sit on where we are at. Tony and I really need to keep abreast of the developments every day. And so we kind of trying to figure out how to do this, how to juggle all of this. And you will probably reach a point where you need to make choices as well as to what you need to spend your time on. And as Tony has said many times, a lot of people spend their time on Facebook looking at the biased information that tells them the sky is falling on their heads. So the moment we can pull out of social media and actually spend time on quality time on learning, I think that will really benefit us, and then our
one
wealth will
thing,
grow. Yeah, sorry.
yeah, one thing on that note with social media, I have to say that social media is quite good at presenting what I would say is information on the plans, if you like, for a less savory world. There is quite a lot of information out there, and by us engaging on it and sharing it, that's actually what's creating the plan. That's part of their plan. Their
Yeah.
plan is to put it out there, and then we go, look what the world we're going into.
Oh,
And as we
whoa.
keep
Yes.
focusing on that, that's what we're going to create.
Yes.
So
Yes.
people need to wake up to that, you know.
Yeah.
And I have spent a lot of time looking at it. I'm not immune to that. I know, especially in our earlier days, when you're coming abreast of some of this information, it is quite confronting and shocking when you realize that there's elements of truth in it. There's a lot of elements of truth, and there are some not very nice people in this world who have
Yeah.
a
Yeah.
complete megalomaniac,
Yes.
psychopathic power trip.
Yes.
But they use us to create the world that they want, and we have to wake up to the fact there's a new timeline opened up.
Yeah.
And that is our choice. Do we go left or do we go right? Do we carry on the path that they're setting for us? Or do we go the road less traveled and actually create our reality
Yes.
using DeFi, the good elements of DeFi and crypto? Not all of it is great, but we're here to sift through the rubble.
Yes. Yeah.
So I really impress on people to stop watching all the fear mongering that's on social media that's going off the charts now. And a lot of it involves crypto. A lot of it involves crypto, and particularly some of the projects we're looking at, because some of the crypto partnerships are with the people that people love to hate. And so by making that to them is enough evidence,
Yeah.
that's their research. Oh, the WEF have promoted XRP. So XRP is a globalist coin, and
Yeah.
that is very limited,
Yes.
and it's not actually the truth.
Yeah.
So I think with this day and age we're in, I am going to really make a point of this because I've been there and done that. I've been under the hammer. I've been under the I've been in some fear about what's happening in the world in my earlier days, but I've been researching this for 30 years, and I have a pretty good understanding of the powers that be, the cabal in this world, because I had a store where I had a whole bookstore with full of books talking all about it. And I've been an avid reader and researcher for all of that time, constantly, pretty much,
Mm.
I'd say hundreds of thousands of hours of research. And, so I'm talking from some level of experience.
Yeah.
And but I've circled back around and I've used my spiritual understanding now and harmonizing that with the financial and the physical and the other material realities. And this is why I feel confident in my own skin that I'm doing the best that I think we can all do.
Yeah.
And I'm quite happy to stand here or sit here and say this is this is something that I have put all my stake on. I've staked my whole my even with my partner, and I've invested all my money and time into this area.
Yeah.
So
Yeah.
I will live and die by the sword. So
Yeah.
and so if you guys get information from it, good information,
Yeah.
and I'm really stoked by
Yeah.
that, but I don't rely on that because if all else falls away, I know that
Yeah.
the truth will stand strong, and that will be what's left. The truth will be left standing when all the illusion is gone.
Yes.
And so we will see in the next few months and couple of years who's actually standing and who's actually bearing fruit.
Yeah. And I submit that really, our worst enemy is not, so and so or this family or that kind of group. Our worst enemy is really ourselves. And if we can with learn about how we got to where we are, it's important to understand, money, economics, finances, banking, and all those things. And just don't get your information from one source, but from a variety of sources.
Very important.
But having done that, then you can see how the system has not worked. And we talked the other day about the lack of coordination. The system doesn't work because it's not coordinated in the service of humanity. There's kind of, yes, one group might say, oh, we want to do this to help people, but then they're pulled back by another group. So the biggest work we can do is on ourselves. And this is why Andrei Khovratov proposes the 8 rules, because if you work with the 8 rules very diligently and how would you say, think about each rule and think about how it applies to you, and just think, what does it really mean? Because when he explains it, sometimes I'm like, I don't know what he's talking about. So it took me a while to understand, and I have actually reworded some of it to make it easier for you guys, and explained it in a slightly different way, in which, I don't know, Tony, you know whether you agree, but in a way that's kind of easier for Anglo-Saxon people to understand, because understand that Andrei is a Russian, and it's translated by Russians, and so the way it's worded can be sometimes a bit strange. So what the 8 rules is saying is work on yourself, reverse the assumptions that you grew up in, that created the world as it is. And using the 8 rules, you will actually break those assumptions. You will face a lot of yourself on the way, your beliefs that you've created through your culture, your upbringing. but use that as a way to move yourself forward. And by doing that, then you can show others how to move forward as well. That's my belief. That's the way we can deal with, the enemy. And I think really, if we work on ourselves, as in, as out, as below, so above. So as we work on our deal with our demons, which are our limiting beliefs, then the world will also start changing in surprising ways. So yeah, let this be the new heart order.
I love
As
that.
somebody
That is
said.
so cool.
Yeah,
Thank you.
cool.
Thank you, Rama. Thank you, Lisbeth, as
Yeah,
well.
thanks,
And
guys.
thank you, Hero. Lovely to see you here.
Yeah.
I'm still suffering from, I've had a migraine headache for the last couple of days, but we have to do this. But it's actually, I always find it quite uplifting, actually, to
Yeah.
finish the week on this kind of presentation.
Yeah.
But it is about the heart. It is a heart order. It is, the heart's in the center for a reason. And if we're truly in our heart, then that is the master. Let the mind be the servant. It makes a much better servant than a master. And the heart is going to lead the way into this new timeline. And I think that the timeline is actually, it's already created, and we just have to step into it. We just have to choose, yes, I commit fully to this new way of prosperity, of real kindness, authenticity, sharing. I mean, all the hallmarks of it are there in humanity. And I think this current pressure that we've got now is just it's purging out the crap. But very soon, we're going to see humanity click into gear like we've never seen. And I think there's going to be a huge creative uprising that will be quite magnificent, actually. And I'm going to do a presentation on the future world that I see and how it unfolds, because I get a lot of intuitions about this, dreams as well, and all I see is something magnificent coming. But we just got to deal with this current darkness, which is within us. It's only a reflection of us. Everything's a reflection of us. Anyways, on that note,
have a fantastic weekend. Yeah. Okay, well, thank you very much for being here, guys. Really, really value your participation and your support and just being here with us, and hope it's been helpful for you. And yeah, really think seriously. Have a look at the replay and go through the rules or principles, no matter what you want to call it, and see if you can start applying them immediately. So have a good weekend, and we'll see you next week. Thanks a lot.